Hi everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you the stocks on the screen that'll be featured in this recording. And if there's a stock of particular interest, you can go directly to it using the chapters feature in this recording. Okay, lots to talk about in the market, so let's get to the chart right away. We're looking at the S&P. There was that ascending pennant pattern we've been talking about for a while in the last couple of weeks' recordings. And you know I've been talking about this ascending pennant for weeks. When you're consolidating like this, it's a breakout pattern. When is it going to break out? Is it an ending diagonal? I gave you two scenarios. One was that the Fed disappoints the market in their Fed meeting this week, and then we get a corrective move, maybe into the wave 4, and then we move higher into the wave 5 target around 615, or we continue to melt up into the end of the year as the Fed does exactly what's expected in their meeting, and then we have the correction after that. Well, we all know what the result of that has been. So let's take a look at the economic news that came out. First of all, on Wednesday, I would have thought the move that occurred in the markets to the downside based on the Fed announcement would have been that the Fed didn't cut, but they did cut. The only thing they did was that they guided from what's expected in the markets to 4 cuts next year down to 2. But they did do the December rate cut, which was in doubt, in my opinion. And I talked about that. I wasn't sure they were going to do it, but they did. And moving from 4 to 2 seemed to rattle the markets. Is that what really rattled the markets? I don't think so. I think it's the phrase that the Fed chairman, Powell, said that we're closer to neutral than people think. That was the phrase that started the corrective move that occurred after Wednesday's meeting. Well, then today, Friday morning, we get the PCE report, which is the Fed's favorite indicator, and it actually comes in a little bit lower than expected. Now, all of a sudden, everything's okay. And we get a big rally to the upside based on the fact that maybe the Fed isn't being quite so hawkish after all. And who knows, maybe we'll have a few more rate cuts as we move into it. The other thing was that the Fed kind of guided those 2 rate cuts to maybe later in the year rather than right after the beginning of the year. But it was that one phrase that turned everything. I was watching the market. So let's get back and take a look at the charts and show you where we are based on the charts. And you can see there was the big downward move. And you can see that we weren't down immediately. We were doing just fine. And we were actually doing fine after the Fed cut the rates. It wasn't until in the Q&A when Chairman Powell made that comment that we're closer to neutral than people think. And you can translate that to meaning that they're about done with cutting rates. They're about where they want to be. That's what the market viewed. And so down we went. We broke the 50-day moving average. We've even set this wave 4. And notice with the low today on Friday, even though we've rebounded nicely from the lows, we're set a wave 4 right at the 38.2% level. And this algorithm has labeled that as a wave 4 and colored it purple, meaning that it feels that that could be the end of the wave 4. And then we could look to turn and move back up to the upside, trending up in this potential ending diagonal. Now we have even more of a case that it could be an ending diagonal. If we do move back up and relabel the wave 5, we get up to around 615 around inauguration time, then we could have a complete ending diagonal and an even more significant correction. We got close. We got down to 7%, but we still haven't had a 10% correction. And remember, every 364 days on average, we have a 10% correction in the market. We have not had that yet. So the potential for this being an ending diagonal is still there. But this is why you watch this stuff. This is why we talked about the consolidation. We talked about how the diagonal was contracting. You can get breakouts like this. You can get outsized moved. And I also talk about when the low volume occurs this time of year, that normally that means less volatility and you creep up. But if there is something that creates volatility, you can have exaggerated moves. And I think maybe yesterday's move to the downside was just a little bit exaggerated, or Wednesday's move. And then we've come back up. But we need to get back into this ascending pennant pattern for it to play out. So we'll watch at the beginning of next week to see if we can get back above this trend line and back in the area above 600. Holy cow. So a whole lot to talk about there. So let's move on. Let's talk about the VIX real quick. And as you would expect, we did move to the upside. I talked to you about this, that if we were to break above the 15 level, we might have something going here in the VIX. That other than that, just the 15 seemed to be the level of resistance. We obviously broke above that with everything that occurred on Wednesday with the Fed meeting. And look where we went. We went above this level here where we had hit a high around 22.5 in September, October, November. And then we're in this area here with the closing prices once again here in December for so 4 straight months closing on the VIX around 22.5. And we'll see how that plays out. Maybe that's it. And then we calm down and start to move back down towards 15 and 12.5 as we move in towards the end of the year. We'll see. I think that could be likely the scenario, especially considering that PCE report that the Fed relies so heavily on coming out today. DIA, and when we look at the DIA, we'd had, some of you have been making comments that I'm too bearish and I'm keep talking about downward moves. We had the Dow go down 10 straight days, which hasn't done that for 50 years. 50 years since we've had the DIA go down 10 days in a row. But we had that. So I don't know how you could accuse me of being too bearish. I'm just reading the charts. The charts are the ones that are forecasting this. And once again here, the wave 4 down right at that 38.2% level. So remember when I talk about the discombobulation, how the markets can get out of whack for short periods of time, but they normally come into being similar. That's what's going on now. So we have both the S&P and the Dow with wave 4s that are labeled here right around the 38.2% level with the potential to move back to the upside. Pretty interesting there. Now let's move to the Qs, the one market that has made no sense to me. And I think I could make an argument that I would have expected with the way rates have gone. We're going to look at the bond market here in just a moment, that we could have had a much worse corrective move out of the Qs. So far, we've just come back down. We're at the top of the C wave here. And if we can hold this level right here, maybe we can turn and go back to the upside. Note that we tapped the 50-day moving average, the royal blue line on the low of the day, and now we're back up at the 10-day moving average. So perhaps we can turn and move back to the upside, but we're going to need bond yields to go down, I think, for that to occur. Let's look at the IWM, and then we'll get to bonds. The IWM has been the one market that has been moving exactly how you would expect it to move. Now, notice how the markets are starting to come back into alignment here. Same thing. Now we have a wave 4 labeled on the IWM after this big move to the downside, which has been occurring as rates have been ticking up. Most people, including myself, think that the IWM, the small caps, are rate sensitive. I believe that myself. And so as rates have ticked up, we've moved down. Now the Qs have gone up even as rates have ticked up, but not the IWM. It's been going down. So this is the one that seems to have been cooperating with the norms on how markets work. Now we're at a 61.8% level. This is a pretty strong level here. And notice that not only do we have that strong fib level, but we have an area here of congestion that is held right where we are now, going back into the fall. September, October, and even the beginning of November, right in this area. So this is a important level for the IWM to hold. And if it does and turn back up, maybe that means that rates will calm just a little bit because they've been a little bit stressful. And then we can move back up in the S&P, the Dow, and the rest of the market. So let's look at the TLT as a representation of what's going on in the bonds. The TNX that I know you guys have liked and asked about, it's just showing the exact opposite of this. There's no difference. So we're showing the 20 because it's in the midpoint between the short end and the long end of the curve. And you can see we just went down, 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 down in prices. We got too low. We actually talked about this last night in our insiders meeting for alert subscribers at ewotrader.com that, okay, now we're getting a little bit away from the 10-day moving average. We're getting a little too low, too much separation, too much of a vertical move to the downside in prices. Remember, as prices move down, yields and rates move up. They move inversely. So with prices moving down on TLT, rates have been moving up. So we got a little bit of a bounce up in prices today. So a little calming effect today in rates, and that had to coincide with the report from the PCE deflator, I think. But notice we're still not back to the 10-day moving average. So maybe we get a little bit more of a breather where we move up in prices and down in yields and rates. Notice where the wave 5 is, exactly at the midpoint of this wave 5 tap box, the forecasted price here on TLT. And if you haven't gone and gotten a copy of this software, what are you waiting on? You watch me week in and week out. Go to hub.com, HUBB.com, and get a copy of this. You get free Elliott Wave. You get free Elliott Wave intraday signals as well. So you get live Elliott Wave. All that's completely free. There's a subscription if you want the AI signals, which I'll talk to you more about later on. But the Elliott Wave and the platform is free. Go get a copy of it. I mean, you can see, you've been watching me. Right smack in the middle of that wave 5 forecast is where we went on bonds. And we've been having this argument. Which one's right? The bond market or the stock market? Some of you have been saying bonds are wrong and yelling at me by putting it in caps in the recordings here. But the bond market is rarely wrong, and the bond market wasn't wrong this time. The bond market sniffed this out. It knew that something was coming, and what was coming was the Fed being a little more hawkish than maybe what the market was looking, even though the market was looking at things with rose-colored glasses, but that isn't what played out. But the bond market was warning this, and that's what happened. And so I think that's really important to know. Let's go and take a look at the metals. Let's look at gold and silver. When we look at GLD, you can see that we're staying in this trading range, and I've drawn these lines here. 255, 235 is where I think the trading range is going to be. I think the metals are going to continue to wait and see what Trump does when he gets in. How much of these tariffs is jawboning? The talk of the tariffs is jawboning versus how much is he really going to put in place? Because if he puts the significant amount of tariffs that he's been talking about in place, then that's likely going to import inflation. There have been economists that have been given numbers on what that could mean towards the CPI, et cetera. So I think the metals are going to wait. And once we get that administration in, we'll get more of a definitive move. So I think we're staying in that trading range. It just playing out exactly as you would expect. And then we go to SLV and notice here that we broke to the downside in this 5-wave pattern. That wave 4 is at 80%, which means we take the Elliott wave off because that is no longer a qualified pattern. We broke the 78.6% fib level. So now we're back looking at the trading range here for silver. So I think with SLV, the trading range is 28 to 25. Now, some of you noted in last week's recording that we do have a pretty well-formed head and shoulders pattern on the SLV here. And you're right, it is. There's the left shoulder, here's the head, there's the right shoulder, the neckline is at 28. The way a head and shoulders pattern works, if this is something that's new to you, you measure from the neckline, which is this line right here, which is where the left shoulder and the right shoulder start. You measure that from the top of the head, and then from that point down, so the same distance from the neckline to the top of the head is what you're looking for on the downward move. So if we talk about the neckline being 28, the top of the head, call it 31, that's a 3-point move. That brings us right down to this support level at 25, which is where I have things. And I think that's the bottom end of the range for SLV. So we can satisfy both that head and shoulders pattern in SLV and stay in the trading range at the same time. So I think that's what happens until we get past the 20th of January. Now let's take a look at what's going on in crypto land. So if we take a look at Bitcoin, and by the way, while I'm talking about cryptos, if you haven't signed up yet for TradeFinder, please do so. You can sign up for TradeFinder using the link on your screen. We do this every Tuesday at 1 p.m. Eastern time. It's live during market hours. We look at the market. We look for trade ideas, and we have a live Q&A. It's a great family. It's a great group of people that share ideas back and forth. And my goodness, if you've been watching what's been going on with TradeFinder lately, you saw that we had that great trade on MARA. Some of you noted that. That is a crypto miner, Bitcoin miner stock. That one did well. We had a home run trade on Amazon as well recently. And then we just did Hyatt Hotels, which is having a nice day. today as well. So these are all recently won. Just go back and look at those trade finders and you can see it. And those are coming from the AI signals that I'm getting from that Hub software. So again, go to hub.com, get a copy of the software. You can try the Elliott Wave for free, but sign up for the AI signals while you can. The data scientists at the Hub organization that created that are going to shut this off at some point. They don't want everybody on the planet to have them. So go there, give yourself a Christmas present. And get those AI signals. You've seen them. Go back and look at the recordings and see what's going on. Look at people's comments. You don't have to take my word for it. All right, so let's get back to the chart of Bitcoin. You can see that we've come back down and we hit the low end here and bounced back up right around 92,000. That's where the support level was. Nothing too nefarious going on here. We broke above 100,000. We started to the upside, but man, what a run we've had in Bitcoin. Coming back and doing a little backing and filling, I think, was warranted. The key here is I would like to see Bitcoin hold 90,000 right in this area, right where the 50-day moving average is. If we can hold there and head back to the upside, I think that's ideal. But with the run that we've had, even a little bit more of a correction would be okay. Where I would get really concerned is if we were to break below this level right here. So somewhere just above 85,000. If we broke down below that, then we have to start looking about coming all the way back to 70,000. I don't think that's going to happen with the new administration coming in and the amount of Bitcoin that President-elect Trump's talking about putting into the Treasury for reserves. If he's going to do part of what he says, it should keep a bid underneath Bitcoin as other countries are doing the exact same thing. But those are the levels that I'm watching. And then with Ethereum, we hung around 4,000. We gave that up. We came back down. We tested that B wave. So basically all we did was follow zigzag rules here. When the zigzag ends, you go up here. So we had a 38.2% perfect B wave correction. That leaves a 61.8% extension. If you go to the next level, you go to the next fib level, that's 100%. That's exactly where we went. When the zigzag ends, you retrace the C wave. And that's what we did. And as soon as we got down here and retraced the C wave back to the B, we bounced back up. Just classic Elliott Wave corrective triangles and zigzag pattern stuff. All this, exactly what you would expect. So here's the triangle. And so you break out, you come back and you test the point of the triangle. So in one fell swoop, we retraced the C wave of the zigzag and we tested the point of the triangle. So there's two of the corrective patterns within Elliott Wave that were both done at the exact same time. Now let's take a look at a couple of the other cryptos that we've been looking at lately. Our Cardano has broken down just a little bit from its triangle. It needs to hold here at 75. So far it has. You can see today it bounced off that level, and where we're currently trading is back up above 90. So if we can continue to hold above 75, maybe we get something else going on in Cardano. But what a lot of people are looking at is XRP, and you can see that one hasn't performed as badly. It didn't break down nearly as far. It came down to the 30-day moving average, which is not a major point of support resistance for me. It's only on the screen because ex-market makers, then that's where you get your information from, not current ones, but ones that you've been on the floor before. Look at the 10-30 moving average crosses as an idea of where we're going to go from a trend standpoint moving forward. I don't use it as a major point of support or resistance is what I'm trying to say, but we did bounce off of it and we're back in this triangle. So XRP performing pretty well here as we take just a little bit of a pause in the crypto space. Now let's look at UNG. And are we going to do it this time? Are we really going to do it? We're moving back to the upside. We're actually getting to the point where we could look for some sort of a potential trade here every time. And you've known this if you've been watching, that UNG looks like it's going to give us an entry, whether it's long or short. It retraces. We had this triangle. We broke to the downside. We came back. We tested the point of the triangle. We moved back down, but we held this lower trend line of higher lows here. And now we've moved to the upside. And I've been saying that if you really want to go long natural gas, you can be very aggressive if you get above the point of this triangle. But the more conservative entry, and the one that I'm looking for, have not done anything on natural gas yet. But if we can break above 16, if we can get above this level, then we're in clean air. then we don't have any resistance in front of us, and we can take off and run. So we're a little bit away from the 10-day moving average here, so maybe we do a little consolidation. What I would like to see is consolidating right under this $16 level, go sideways for a few days, then break out, and then I would be interested in going long natural gas. And maybe we can actually put a trade on natural gas that we've been waiting for so very long. Looking at USO, still in this big triangle. I don't know what else to say about this. I've talked about this over and over and over again. We will break out of this triangle. I just don't know if we can break above 77.5 or below 66, call it, once we break out of the triangle. I just feel that oil is destined for a big trading range for quite some time. We'll break out of this consolidation, but how far can we break? It's the question. And I just feel like as we get into drill, baby, drill with the new administration, as I mentioned numerous times, I feel like OPEC is just going to cut their production to meet whatever increase there is in domestic production in the U.S., and they're going to want to keep oil steady. And I just think that we hang around this trading range. We can go up, we can go down, but I think we're going to stay in this big range. I think that's where we're destined to go on USO. We'll see that moving forward. Now getting to stocks that you all have asked about, stocks of interest, if you will. So when I look at APLD, and as a quick reminder, gosh, we're at the 20th of December, and we will not have a market update next week. So this is the very last opportunity for you to get involved and try to receive one of those free level 3 subscriptions that we're giving away at evotrader.com that incorporates our time strategy, which is our sideways based strategy on stocks that have had a big drop. We look for calendars, butterflies, etc., just income-based strategies. Also, our volatility strategy, which is triangles. And boy, I plan on putting on a whole bunch of those before the end of the year. As volatility comes back down, I do think volatility is going to pick up in January, and we're going to have accelerated volatility through next year. So those are going to be coming in fast and furious towards the end of the year. And then we also have our AI-based impulse strategy, which is those zigzag patterns within a wave 3 that I've been talking to you about. And the level 3 encompasses all those, and you get one of those for free if you win the drawing. And each and every month this year, we've been doing a drawing, and all you have to do to register for the drawing is leave a comment. Just leave a comment on this video, and you're in the drawing. And if you've been following these videos, you've been making nice comments, and I really appreciate it. Please hit subscribe if you haven't already, and note some of your friends that are interested in trading if you feel like they may be able to take advantage of this. So love to have you. Last chance for December for this year to get involved in the drawing. So please leave a comment, hit that subscribe button. We really appreciate it. All right, so let's get back to your stocks of interest that you asked about. APLD. We are breaking a little bit below the 50-day moving average here. Turn the Elliott Wave button back on, and you can see that, we're right at that 61.8% level. So if we can hold here on Applied Digital, if we can hold right in this area, and it's a pretty strong fib level, my favorite of all, the 61.8, I think it's the strongest, then perhaps we can turn and move back to the upside here towards the wave 5. So if you have some aggressive money sitting around that you're looking for something to do with, and you're willing to take a little bit more risk with it, then I think you could probably take a shot at this and see. If you want to be just a touch more conservative, let it get back above the 50-day moving average first, because it's pretty aggressive right now, especially when we're getting awfully close to a bearish 1030 cross. We don't have it yet. So again, very risky discretionary type money. You could go ahead and take a look at it, or wait till we get back above the 50-day moving average. But you would be banking on this strong 1.8% level holding, which very well could. CELH, I was ill last week when I did the recording, so I didn't get some of the stocks that I promised you. So I'm making up for that in this week's recording. And you can see we're in a wave 3 to the downside here on CELH. We came back up to the 50-day moving average. We've come back down. We're below the 10-day moving average. So the key is with this zigzag extension at 161.8% level, can we break below that? I think we're in a kind of wait and see mode here on CELH. a big trading range, if you will, between 25 and call it 35, even though that 100% line is up there. I think you can make a pretty good case for having resistance there at 35. So I think we're destined for being range bound on CELH. I don't think we're going to break below this 25 level and make a new wave 3 lower, but I'm not sure we're ready to go up and make the wave 4 yet either. I think we'd have to break above that 35 level. So I think we're range bound in CELH for now. Estee Lauder, just an awfully good 5-wave pattern set up here. You would like to have seen the wave 4 go a little further. We didn't quite fill the gap either. So that's the only thing that makes me nervous about the fact that, boy, this could be set up as a really good short. Had we gone just a little higher and actually filled that gap, made the wave 4 above the 23.6% fib level, which is barely where we got, but we broke to the downside here. But note that in the AI that the software produces, this is a sideways score, and it's an extremely low sideways score. So basically what that is, that's our time strategy within the EWO platform that I was talking about, the level 3, and it tells you what the likelihood is of staying in this trading range. Well, when you have a really low score, it's telling you the likelihood is you're going to break out of the trading range, which is exactly what we did. A perfect example of how the AI works. In this case, instead of being directional, being sideways. So with a very low score, you fade that. You go the opposite way. So instead of thinking it's going to go sideways, you think it's going to move. And it did. So we broke up. We came near the point of filling that gap. And now we're headed back down. We want to wait and see if we can get that wave 4 to turn purple, meaning that the algorithm thinks that wave 4 is done. Since it's green, it's not sure that's complete. So we could bounce and head back higher yet on Estee Lauder. But for now, that's what you want to watch. You want to wait and see, do we actually get a little higher, maybe up to 85 and fill the gap and the wave 4 turn purple, meaning that that's the end of the wave 4. And then we trade lower. But for now, following Elliott Wave rules, hard to know whether or not we go to the upside or the downside. RTX Corp, also down in the wave 4, but this time it is colored purple, meaning that the algorithm thinks this could be the end of the wave 4. And we could move back to the upside. So it'll give you that same analysis between being aggressive or being conservative. If you want to be aggressive, you want to see this wave 4 hold. So your stop is very close by. So from a risk to reward standpoint, if you want to go long here, you go long right now. If we break below that 115 level, you're out. So you have a very short stop there. So very little risk. And you move to the upside. You want to be a little more conservative, let it get back above the 50-day moving average. As it could potentially move into the wave 5. So aggressive, you can try now, more conservative above the 50-day moving average, but either way, your stop is there at 115. And then we'll finish things off with Coinbase. Some disappointment that it wasn't put in the NDX here. There was hopes that maybe it would be. So we traded lower on that, but you can see a wave 4, and again, color purple. So the algorithm thinks that could be the end of the wave 4. Right here around this 255 level, we bounced up. We're back above the 50-day moving average. If you want to go long Coinbase, I think let it get back above the 10. Let it get back above the 10-day moving average in 300. So just keep an eye on this for now. With everything that's going on in the crypto world, when the next earnings report cycle comes out, you would think they would have a good earnings report. But we don't need to jump the gun and be too aggressive. Let's just wait and see if we can hold above this level here. At that point, they're just above 250. Stay above that. I think if you're long, you stay long now. If you broke that level, then you would want to get out. But if you're already long, stay long. If you're wanting to get long, wait till it gets back above 300, and then it could be off to the races. Thanks, as always, for your attention. Again, we won't be doing a recording next weekend with the holidays. Happy holidays to everybody. Thank you so much for your attention and watching and all your comments throughout the year. Have a great holiday season. Hope you get to spend some quality time with family, friends, and loved ones. And we look forward to seeing you in the new year and what great things could hold then. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.